All right, well, we're going to get started here. Hello, everybody. We are doing this presentation from actually about 10, I don't know how many miles above the Earth. We figured we'd do it from up here since we are going to be making some bold predictions. Anyway, so this is a dental practice transitions market update based on things that occurred uh, currently, things that are occurring, and things that are more than likely going to occur because of some of the tax changes, vaccine effects, and so on and so forth. This is a good seminar for virtually anybody involved in transitions as far as buying and selling practices. Um, so a little bit of information about me, simple stuff. I've had all kinds of experience, been in dental for over 20 years, starting out with Patterson Dental, doing supplies, and then did some equipment, office design, AutoCAD design, and then practice appraisals, mediation, and then obviously transitions. So let's jump in. Vaccine and tax changes. So these are two big factors that are, as we go through, you're going to see how this is currently factoring in the market and how it's going to factor in the months to come. So just as a recap, obviously in the fourth quarter of last year and the first quarter of last year, we were at all-time highs. I can only speak for the market in Virginia, but we were at all-time highs. We had a nice inventory of practices that were very healthy. They were turning over rather quickly for top prices. Buyers were calling us on a regular basis, and things were great. Obviously, then COVID hits, and we had to shut down. Everybody, my company included, for at least 2 months. We tried to stay busy, obviously doing some Zoom webinars and such, but not much activity, obviously. By the third quarter of last year, that's when the market started changing and opening up a little bit. I believe, in Virginia, it was sometime in May or early June where the offices were allowed to open up beyond emergencies. And then I found a lot of my practices that I was working with closely. Some opened up immediately. Some took some time to get the right PPP and so on and so forth in order to be able to open correctly and safely. Now, what we also noticed by the third quarter of last year and into the first quarter, just a slow kind of build up. Still a lot of uncertainty in the market, quite frankly. Now, talking about uncertainty, I think we did a little research, and in Virginia, as of March 21st, about a week and a half ago or a week ago, it's been 25% of the state had been vaccinated with at least one shot. And then every day, daily, vaccinations are growing at 50,000 people a day. Why is this important, and why am I talking about it? I'm going to go into a little example. So, I coach baseball for my son. It's so much fun. We're at it 4 days a week at least, and so the kids are getting out there, the adults are getting out there, people are talking, and obviously, as per regulations, we're wearing masks. The adults are on the field. But one of the fellows that I coach with, who has been really hesitant about anything regards to kind of opening up and expanding into some normalcy, he pulled his mask down to me the other day and smiled and said, I hear that in Virginia they're going to be opening up where you don't have to wear masks outside anymore. And I kind of, and I guess he was talking about in the baseball field realm. And I kind of thought to myself, I said, people's mentality is starting to kind of to build some growth, not some growth, some confidence in the fact that we're getting better, right? Things are getting better. Things are opening up. This is something I did. This is a slide I did back as soon as COVID hit and we were returning. And I said there's going to be temporary uncertainty in the market of dental transitions. Uncertainty because nobody knew, is this going to happen again? What about vaccine? How is that going to affect us? When is that going to happen? When do things stabilize, right? So one of the factors that causes a destabilization is what caused a destabilization was the COVID fears. being able to ramp up production to normal and above normal levels, and when would that happen? One interesting thing we saw is in the urban areas versus rural. The more congested areas have been really slow to kind of get back up, whereas the rural communities around the state of Virginia really never saw a dip in production. So what does this mean for buyers? What does all this mean? The real effect right now is it is for both buyers and sellers, but focusing on buyers. What it means is that there's very good practices out there that typically may have not been. We got a lot of calls from buyers who were saying, hey, this made me really rethink my retirement. I had some time off. And it's a lot. It's a lot managing the business now and managing people and this PPP and all the extra added factors to running a business that now are occurring. So anyway, we've got a very strong inventory, and we've had a very strong inventory, and we have a lot of calls, considering selling. So there's good practices on the market that previously may have been holding out. Interest rates are still hovering at 3.5%, give or take. I mean, this is crazy. It's free money. I'll get into that a little bit further. And then practice values, and I'm going to get into that. So what I'm seeing is very interesting. It's a weird, interesting situation. So us as business evaluators, we had to consider 2020, which had sometimes 2 to 3 months worth of shutdown or lack of production, and somehow project a reasonable value discounting that 2-month loss. So certain things we did, and we talked to lenders about it, is in essence looking at month to month. How did we recover? How did these practices recover, in August, September, October? I want to see 90 days. I want to see, are we 80 to 90% of what we were pre-COVID from a production level standpoint? And a lot of my practices they were right in that sweet spot, 90 to 100%. What's going on now is really, really wild to me. So I've got about 8 active listings, and 6 of the 8 listings have minimum 20% trend of growth, not only over 2020, over 2019 and 20. So there is a clear gluttony of work from patients that is starting to storm into. Again, in my book of business, the doctors I'm working with are blowing numbers away from 2019 to 20 in the first quarter of this year. So what does that mean? I can't adjust the price yet, but what it means is if that trend continues through the end of the year, their values are also going to go up 20%. So why do buyers need to consider that? So I'm going to go into something, when I look at what a buyer is in the dental space, obviously I in our business, we always focus on personality match with the seller, right? Do you do the same procedure mix? Are you going to get along with the staff, right? These are very important factors. You also got to obviously look at the numbers, and it is an investment. So me personally, when it comes to investments, and I have questions, I call my financial advisor, right? I also, in our space, I look at to see what private equity is doing. I want to see how they're acting. So those are 2 factors. If I'm a buyer right now, I want to focus on. So I'm going to use an example of something that happened last year, right around this time, to give you an idea of how savvy investors think. So February of 18th last year, the S&P was up 8% and hit an all-time high, right? COVID hit, shutdowns. By the end of March, it had dropped so quick, it dropped 40%, right? And then smart investors obviously are watching what's going on. They saw the Feds drop the rates below 0, and they saw stimulus packages, which created some confidence for the investors. By May 11th, okay, the S&P had climbed 30% back to previous all-time highs that I hit in February. So why did that happen? A lot of people ask that question, why did that happen? It happened simply because savvy investors saw an opportunity to make money, and there was enough confidence in the market to reinvest. And I tell you this because you as a buyer, I don't care, first-time buyer, multi-practice buyer, understand when you're getting values and make the move. You don't hesitate, right? And again, going back to that slide, I believe, again, if the trends in my offices continue the way they are for the first quarter through the year, you are getting a steal, a 20% discount right now on some of these practices. And my practices are not the only ones that had a killer first quarter. Talk to brokers all over the country, right? So buyers need to really strongly consider this. The other factor is the banks, right? So during the shutdown, the banks were a little hesitant. There were one or two that were dental lenders that were making some loans, and God bless them because they helped us all keep moving forward. Other banks have kind of jumped back in, and as of right now, I'm not seeing any issues in lending. What's great about dental lending, a lot of sellers ask me this, oh, these students, they have all this debt and, they've got a car loan and all this stuff. I said, look, it doesn't necessarily matter. You have to understand how dental practices are evaluated, why they're evaluated that way, and how banks look at it. And so I'm on the same level as the banks when I value a practice. I'm not worried about percentage of collections as much as I'm worried about what is the cash flow, what is the profit, okay? Because what a bank does is do what's called a global cash flow. So they're going to look at how much profit is being spit out by the business. Then they're looking at the finances of the buyer. Is the buyer over leveraged? Can the cash flow from the business keep them floating and have them make enough money to keep their lifestyle going, right? So this is why banks are able to lend 100% financing. This is also why you as sellers need to understand how important it is to know your bottom line. I don't care if you do $5 million in dentistry. If there's little profit, it's not worth it from a financial standpoint. So the other leader that I'm looking at, I'm a buyer, right? I'm looking at private equity. So what is private equity doing in the dental space right now? So think about it this way. So DSO's typical growth strategy is through acquisition. Now, during 2020, during COVID, there was basically no activity for minimum 6 months, typically 9 months, right? By March, everything had gone to a halt, right? Now, once the offices opened back up, most private equity absolutely needed to see at least 3 months of profit and loss statement to make sure that, again, they returned to the trend they were pre-COVID before even considering making an offer. So what does that mean? That means there virtually were, I would argue, 10% of the actual acquisitions that were supposed to be made by a lot of major DSOs when up to 10% were actually made. So 90% of the stuff was never purchased to meet their goals of growth. So what does that mean? You've got a gluttony of required or requested growth from private equity to the DSO owners, okay? And that means that you got a lot of hungry DSOs out there. Our phones have been ringing off the hook with private equity buyers, and they're very hungry. They also noticed that oral surgery, endodontics, we've done some analysis on some of these practices, specialists, and they were virtually pandemic resistant. Not only were they busy through the pandemic because of emergencies, they came out busting through the gates as soon as the doors opened up as well. So very interesting, and talk about adding confidence to the market for some of these specialties. DSOs are very hungry for larger oral surgery groups and endodontic groups. One of the things that we've done here in Virginia is we're able to bring multiple offices together from different regions and almost create a quasi DSO from 4 or 5 different owners and allow us to get a larger multiple for each owner and seller at the time of sale. It's a whole nother story. I'll get into it, but I figured it was worth mentioning. Here's another big thing. So DSOs are looking to recap before the end of this year based on what's going on with the new proposed tax plan. So what does that mean, recap? That means that the goal of a DSO is to grow through acquisition, increase their EBITDA, which therefore increases the multiple that a buyer, the bigger fish, will pay for that EBITDA, right? And so, again, if they wait beyond this year to recap, And I'm going to go into my next slide. You're going to see the issue that a lot of these DSOs are going to be facing. I'm going to use my little annotate tool, and hopefully it works here. Sometimes I have a little trouble with it, but anyway. So here you've got your typical ordinary income of 37%. Okay, this is the tax plan. This is the proposed tax plan and the effect on large DSOs recapping or selling. Okay, solo guys, hang in there. I'm going to hit you next, but this is important for everybody to understand. So typically, let's just say this is a 6 location business with $1 million in EBITDA. Just some round numbers. We've got a business evaluation of a 7 times multiple. So you're looking at a purchase price for a buyer. Oh, not up there. Right there. 7 million purchase price, right? So we've got a blended effective tax rate of 21 and change. See, this thing stinks. Anyway, less federal tax of $1.5 million. Your net proceeds of 5,481. I'm going to shut this off, actually, because it's just driving me nuts. Anyway, so here we go. So then we've got the expected, what's going to happen in 2022 with the same business, same 6 location business doing $1 million in EBITDA. $7 million buy price, 7 times multiple. Now the blended tax rate with the new proposed plan of 39.6% long-term capital gains tax rate. Digest that, folks. That's 20%. Double. Okay. Then you've got an expected flat tax for anybody with income over 400K of 39.6%. Now, what does that mean, flat tax? It means that, you're taxed on the whole 400,000, 39.6%. Whereas in the tiered system previously with taxes, you're paying less in the lower amounts, and then eventually after a certain amount, you're paying that high percentage. Okay, big changes coming, guys. So how does that affect your sale? In this case, you're talking about almost 18% difference. So $1.2 million. Okay, that's the difference between that same business closing this year versus next year based on the new tax plan. So there are 2 ways you can affect that. A, you sell now. 3 ways. B, next year or the year after, you create higher demand in your business. So instead of getting a 7 times multiple, you try to get a 9 times multiple. How do you do that? I could spend an hour telling you, but in essence, refine your efficiencies, work on your centralizations, really become that handoff DSO that a lot of these guys are looking for, a lot of these groups are looking for. So in that case, because even though you're paying that higher taxes, you've increased the buying price to $9 million, offset the $2 million extra in taxes, and you're roughly back to where you were, prior to creating those efficiencies. The other way, obviously, is growth. You can grow up to 30%, okay, in the next year or 2, and still get that 7 times multiple, and again, stay in that $5.4 million range. And you make up, the higher price is made up by the 30% growth, right? Easier said than done, folks. So one of the reasons I've said, look, now's a good time for some of these larger groups and practices to sell. I mean, bottom line is this, the demand is very strong right now. And I went through why DSOs are hungry. Okay. Now each DSO has its own culture, their visions, their strategy for growth. When we represent and sell to DSOs, we virtually never sell to the highest offer. It's all about the terms and the perfect fit. Because at the end of the day, if you're working for someone for multiple years, you better be comfortable with them. So anybody interested in finding out more about that stuff, obviously, we're around. So I'm going to go into solo space a little bit, okay? So this is what a private solo practice looks like, okay? So currently, this is $1 million practice, standard $1 million practice with 18% profit. So we got 180,000 in EBITDA. We've got valuation of about 720 on it, nice round numbers. We've got a nice little 80-20 split on goodwill versus fixed assets. A blended tax rate of 23.4%. Seller's going to pay about 168,000 and change, and net 550 after taxes. Okay, right? Now let's see what happens if they sell next year. Same business, right? $1 million business production, 180,000 in profit, $720,000 price tag, blended tax rate of 39.6, taxes $285,000, income 434, 16% increase in taxes, $116,000 less in income between selling this year versus next year. Now, how can we if we don't want to sell this year, but we want to wait, and we're now in the new, sorry, we're in the new tax bracket year. We've got same business, right? We can get a higher multiple. We can get more money. We get 900,000. How do we do that? Improve our efficiencies, improve our profits, okay? Improve our top line. And if that's the case, we can offset. And the amount you're going to have to improve your top line, again, is roughly 30%. You're going to have to grow by 30% to offset that tax difference. Just keep that rough number in your head. Again, if you're on the fence, this is solid reasons why financially it makes sense to move this year as a seller. And you can check out the proposed plan, but your business, sale of your business will, the federal government will affect the sale by over 80% at the end of the day. You'll need to increase over 30%. We talked about it. Here's something to really understand and consider. I don't care if you're a big practice or a small practice. It takes a long time, a reasonable amount of time. I say 4 to 9 months to start, market, find the right buyer, close the deal, and begin your transition. And so, we're right now and just finishing up the first quarter, and I'm, urging people that have watched this and considering selling to really look at what their timeline is. And if it's within 2 years, I would think now would be the time to start. If it's more than 2 years and you want to kind of wait out the potential new tax plan, that's fine. Still good time to plan, right, at some point. We have a large amount of buyers in the last 3 weeks. It's been crazy. We've got, our phones have been kind of burning up. I've had 7 buyer consults the week before and about 5 this week so far. So buyers are starting to come out, spring weather, vaccine, who knows. But timing is becoming right. I honestly believe, here's my summary on all this stuff. I honestly believe that the next 8 months or so, it's literally the perfect storm for both buyers and sellers. There's a win-win out there for both parties. We really focus on win-win. It's something that's important to us from our mission statement and values at Commonwealth. And I'm really excited about what's going to happen in the next couple of months because, I do see buyers getting historic low interest rates, right? Excellent practice opportunities. With the vaccine and the potential of a shutdown kind of dissipating, that's building confidence. And again, I said it, right now they're depressed values because the businesses, some of these dental practices are really busting at the seams right now. And I can't raise the price until we get deeper into the year. And that's something as a buyer they should consider taking advantage of. And again, for sellers, take advantage of the current tax base. And again, we're not pushy, but from an advisory role, it simply financially makes sense. So that's what we have for today. Thank you so much for joining us. We post this obviously on our website, and I believe we're going to send out an email blast to those who missed it or even those who did see it and want to kind of be able to view it at any time. We'll send you a link and everything. Here's our page. I do buyer consults all the time, seller consults all the time. We also do Zoom presentations and meetings individually for buyers to educate them on practices. And again, for sellers to educate them and find out to see what they're looking for and so on and so forth. One of the things that's really interesting, I'll just, as a last tidbit, what gets highest value for a practice, quite frankly, is being able to present information of the practice in a neat, clean, efficient, and overall way. Okay, I've seen appraisals and they're like 30 pages long and written in, Spanish, or, I'm joking, but they're definitely, it's like reading stereo instructions. We went in a whole different area, and we ended up creating a 17-page brochure, which includes financials, graphs for KPIs, key performance indicators in all our practices. If anybody has never seen it, it's pretty cool, and it's available online for all our practices at any time for anybody who's registered. So what that does is, and again, you want to be able to present everything about a practice up front as clean as possible, and that will attract the most buyers. You can't just throw a number on something and an advertisement out there. That's not going to net you the healthiest buyers and the highest price. So keep that in consideration, sellers and buyers. We love to educate you, and we're here for you. So again, thank you for everything today. We do one of these typically every month, either 2 to 3 a quarter. So look forward to seeing you all again. Thank you very much.